I do not think that it's regulations that are a problem here. Regulations, especially in the US, tend to rather be positive for crypto now, right? They tend to be supportive of crypto. What I think is going on here is simply that people are taking profit since many massive whales bought the bottom. They bought at around 20K, 16K at the prior bottom. They are still, even after this crash, in net unrealized profit. And so they're just realizing their profit. If the momentum dies down, then we rather want to get out very quickly and then we buy back in again once we are low enough again. So that's probably a thinking here. There's also this idea of the self-fulfilling prophecy, right? So let's say we've got the 4-year cycle, we compare prior bull and bear markets, we look at what point in time did the bull market start and how long did it last and when did it turn around. So when we measure the cycles from the cycle bottom, then this top that happened at the 120K is pretty much expected. It pretty much happened bang on in the same weeks as prior cycles. So the duration is pretty much the same, and so this can simply just become a self-fulfilling prophecy. So the idea really is that if enough people think that something will happen with crypto prices, that it will indeed happen. So in other words, if everybody thinks that an asset is very, very cheap at a particular point in time, they might simply buy it and they might stop selling it. When many people think that something is expensive at a certain level, then the price will not be able to appreciate anymore. And I think that this is also partially the reason why we've got these glass ceilings for those different metrics, right? If everybody thinks that now altcoins are expensive, they will not go up anymore, right? This is true for both of those metrics. It's also true for Ethereum, for example. When everybody sees that Ethereum is an all-time high, the question is always, what's really at that point in time the potential risk versus reward, right? When the risk from the all-time high to a potential bottom is close to 80%, but we don't necessarily expect a doubling of Ethereum's price when it's already close to the all-time high, then it might make sense to take profit. That's probably what's happening. It's just self-fulfilling prophecy. It's just the psychology of the market reinforcing itself. Have a look at this here, right? This is Bitcoin's number of active addresses long term. People think that Bitcoin is still very long term, getting more and more adoption. So people think that crypto is still early and that it's still growing. But really, when we look at the number of active addresses on chain, that's obviously not true. That's for Bitcoin. We've got the same picture for Ethereum, right? So there's a number of active Ethereum addresses over time. Really, over the last years, this did not grow. And so that's a problem, right? Bitcoin is not necessarily anymore a technology to transfer value, to be used in day-to-day commerce. It's just used as a store of value. It has just repurposed itself to a degree. And so that's maybe also one of the reasons why Bitcoin has such a hard time outperforming other tech investments, right? When it's just yet another risk-on investment that's highly correlated to the Nasdaq 100, then why should it outperform when its on-chain metrics don't suggest further growth? It's just like any other risk-on asset. It just performs like any other thing. Have a look at this. This is the number of active addresses with a balance of at least one Bitcoin. So what we're looking at here is how many people hold at least one Bitcoin and tend to be long-term investors. And this flipped around in October of 2023. And interestingly enough, this is also when the Grayscale Bitcoin Trust launched. This is also when the ETF got more and more adoption. So we can really see that there is a preference by the market not necessarily to hold Bitcoin in self-custody. The idea is novel, right? The idea is, okay, we do not want to have the state involved in anything. If there's some state overreach, we've got something to fall back on. We've got Bitcoin, we've got our custody, we've got our Bitcoin, our capital in our hands. But there's a lot of problems with that idea as well, right? There's the problem that maybe we might lose our seed phrase. There's the problem that maybe we make a transaction that's irreversible that we didn't want to make, right? We got scammed. There's all kinds of problems with Bitcoin that we do not have with other asset classes, and so people that are not so deep in the space, that simply just want to buy some Bitcoin for first exposure, tend to now just buy the ETF. And this is now putting the brakes even stronger on adoption for Bitcoin. Before, when people were simply just having self-custodied Bitcoin, they would still try the network. They would still try to use it for other things besides just holding it. But now that getting exposure to the asset class has become easier and easier and has been decoupled from the technology itself, it's not that clear that we actually see more long-term growth of the technology. And it seems like the development in many ways in crypto have also slowed down a bit. Right, so everybody that made money in the last 12 to 24 months was mainly just trading meme coins or was trading the momentum, was not necessarily developing a decentralized finance app. Right, all the DeFi apps, Aave, etc., they have been developed in 2018, 2019, potentially 2020. But what happened in the last 5 to 6 years? That was meme coin trading. That was player versus player gaming. And the people that knew the game, they made money. The people that didn't know the game that well, they lost money. There was a concentration of capital. But when the market does not reward new innovation, when the market does not reward new developments, and when the market doesn't even reward anymore learning how to do self-custody of Bitcoin, it's very questionable how much long-term Bitcoin can outperform. And so really, I think now it's more important than ever to find ways to time the market, to buy the market when it's comparatively cheap, and to sell the market when it's comparatively expensive. It was okay to just hodl your way through the cycles in the past. That was fine. But I do think that in the future, the outperformance of Bitcoin relative to other risk-on assets will continue to rather go down.